In this video, we are going to be discussing when to know when a stock is more likely to trend versus not. Enjoy. So this lecture is going to be on how to know when a stock will trend. We will go through some examples of inside and outside bars, and then go into a few examples from today. Knowing when a stock will trend is a key important component into your trading. It helps you understand what strategies to implement and what is more than likely to expect on the market. So when we go into the importance here, finding trending stocks and trading with the trend is the best way to capture profits in the market, or what I should say is the easiest way. Now, when we go into finding trends, what are we looking for? In my opinion, the main way to identify what is most likely to happen is by looking at the structure from the daily chart. And I love looking at the daily chart because it gives you a full view of what is going on. And when we get that daily chart, then what's happening on the daily chart, we can get an identification of what is likely to happen on the shorter time frame chart. So that is going to be what I'm doing first, is I'm going to be looking at the daily chart and what has happened on the daily chart. You can break it down into shorter candles like the 5-minute or 15. What am I looking at? Are we trading in an inside bar, which means that we're less likely to trend and often lead to consolidation? I'll cover this shortly here in an example. If this is the case, where we are in an inside bar day, this tells me we are more likely to chop around in range than we are to trend. That's when you start looking for things like support bounces and resistance rejections, because we're trading in a channel, something similar to this, where we're looking to fade the extremes, because we're a likely inside bar day and not as likely to trend. Now, an outside bar day, that's where you're more likely to trend, where we can look for those trending plays, taking pullback entries in trends, looking something like this and trying to capture those pullbacks in this trend, targeting those prior highs. Now, you can do this on stocks, so identifying inside and outside bars, and then the market as well. You may be wondering, what even is an inside bar? Great question. An inside bar is simply a candle that is within the range of the prior candle over here. So you can see it is completely inside this range here. And what this is indicating to us is we're trading within the prior day's range. That means consolidation, because if we were strong, we would have broken out of that prior day range and continued that trending bar or that trending day. Instead, we're trading in that prior day range. So if we go out and even in a line chart, boom, we have something like this. Now all of a sudden you're doing something like this where it just chops around like this. This is not where we want to be trading. This is where we want to be trading to capture that trend. So an inside bar is just a bar that is within the high and low of the previous bar. An outside bar. Now we add another element. An outside bar, as simple as it sounds, is simply a candle that is outside the previous day's range. So you can see we broke above this high. This is an outside bar here because we cleared above that high up into here. And this is where we look for that trending momentum, and we look for pullbacks within that trend. So understanding inside and outside bars are a great way to understand if a stock is more likely to trend or not. When you're in an inside bar, it is a lot less likely to trend. Now, main thinking, let's say we're trading, this was the day prior, and we open up here. My main thinking is, unless we break out of these two ranges, it's going to be an inside bar day because it is going to be choppy. Now, when we break above, I'm thinking trending longs over this prior high and trending shorts below this. If the structure allows, that is going to be what I am looking for. An outside bar day is much more likely to trend than trading this inside bar day like such. And what you commonly see is a lot of expansion off of an outside bar, because an outside bar represents pause or consolidation, and then you get an explosive move like this. This is referred to as a 1-2-3 setup, where you get candle 1, you get inside bar candle 2, and then an explosive move on candle 3. You will see this a lot of times because you get a push up, some buyers taking profit, some shorts coming in, boom, trapping out those shorts, buyers coming back in on this breakout, and then you get this push higher. When can we expect to see inside bar days? the most common inside bar days follow large movements. So large candles that are going to be bigger than what has happened in the average or in the past 20, say 30, 40 candles, those are much more likely to be inside bar days on the following candle as the market is attempting to digest the move. So hypothetically, let's say we opened up right here. So this is the prior day and this is where we opened. There's a really good chance we're going to be trading either within this high or within this low, likely an inside bar day. And remember, what that's telling us is we're less likely to trend. So it increases the expected value of an inside bar day, especially after a breakdown and then a gap up. And you will see that on the market today here, actually. Another way to think of finding trending structures is looking at prior structure. So stocks already trending, whether that be prior day or pre-market, are much more likely to trend. So when we look at these graphs down here, if the pre-market's looking like this and we're already trading up into, say this is the open, this is an increased expected value for that trend to continue if we hold above the opening print right here. Same thing with the downside here. If we're in a downtrend and we open right here, we're below that opening print, much more likely to do something like this and continue lower. So we're looking at that previous day structure or the pre-market structure. And with that being said, let's look at some charts here. And let's go here and discard that. All right, and let's make this bigger. Let's go in and look at some structure here on SPY. And this is where I thought of it, and the idea came from is when you get these wide range bars, it is so common to trade within that range. So we get this big bar here yesterday, and then we get this inside bar here, right here. And what's really hard then is when you're trading this. This is just pure chop, and you're not going to see any follow through. Yes, we did trend a little bit into the close, but this opening all the way up until pretty much 11 o'clock, so 2.5 hours into the market, you're going nowhere. This is where, especially when you're trading options, you're just going to get chopped up. You're going to find no true momentum, and it's just going to continue to stop you out, boom, pull back, continue to stop you out, boom, pull back. This is those days, again, where we're trying to play the bounces off support and rejection off of resistance. So we're combining the structure on the daily chart and then going into the shorter time frames. Another one I wanted to break down here is, let's go in, actually, before I do that, there's another example here on SPY. What about this bar right here? Big red bar, what happens the next day? An inside bar. So you have minimal movement, you don't have much trending momentum, and it's going to be one of those days where you're looking to fade the extremes of the move. And let's go into Shopify right here. Similar to today, you get a wide range bar. We gapped up to open in the middle of this bar, and look what happens. There's not much movement. Yes, we come down here and we have a slight sell-off in the morning. This is just premium decay right here. This is where you get stuck and you're wondering what's happening to your premiums and the stock is pushing out. It's all premium decay here. So now if we go out to the daily chart and now we map out these off of an inside bar and we break above either this high here or this low here, then we are much more likely to see trending momentum and strength as we would then be in an outside bar. I hope this video helps you guys. If you have any questions or comments, feel free to leave them down below. If you are interested in checking out our team, we'd love to have you guys on board at simplified-investing.com today. Enjoy.